Why is Lululemon down around 10% on the day? And it may be because they've come out with some numbers that may not make the market very optimistic about their margin growth going on into 2023. Now, if you don't know about Lululemon, they're what I would call a luxury athletic gear maker. They sell high-end clothes in the athletic space. They have a certain segment of the audience that they're going after. It's been said that they have a cult following. They often have sellouts of their clothing as soon as they're released, and they sell them at a much higher price point. And it also goes to show you that even though people can go to a retail store, they can go to a thrift store and get a lot of this athletic gear for a less expensive price. When you know who your audience is and what they're looking for, their audience historically has been looking to pay for their brand. Doesn't matter that I can go to a retail store and get these clothing for less price. I don't want to pay less. I want to pay this price to get this brand. So it's a really good exercise in marketing and public perception of the value of a brand. And what we could be seeing is that they may be losing some of that ferocity around their brand, maybe some of the desire to continue to buy more and more of their clothing and have a closet full of their clothing may be softening. In an article from the Wall Street Journal, we found out that big holiday crowds did not translate into big profits for Lululemon Athletica. The shares tumbled on Monday. They're around about almost 9% on the day, after the company warned that profit margins would decline in the quarter ending January 29th. And then it lowered its earnings expectations, and they're lower than what Wall Street expected from the brand. So Lululemon Chief Executive McDonald, he said that shopper visits remain strong in the fourth quarter across the physical and digital channels, and he's not going to explain why the profit margins contracted, but he may give some insight to it. And they're going to have a investors meeting and also an analyst meeting in Orlando, Florida this week. It's a multi-day event. It's going to be a really big event for them. Lululemon finished the third quarter with inventories up 85% compared with the prior year period. And this is something we observed their last earnings. On their last earnings, they gapped down. And they gapped down because they show that inventories were up 85%. And often that means that you're going to have to cut prices to move the inventory, which is going to compress margins. And therefore, what we saw is that the market had already anticipated a margin contraction because of the higher inventories. And now we're starting to see that Lululemon is now starting to forecast that, because what they will eventually have to do is cut the price of their inventory just to try to move it, which we know even if they drive revenue, it's going to decrease the margin profitability. So we have an analyst, Koenig, says that they see dark clouds forming ahead. He said the company is facing difficulties in repeating its outsized performance earlier in the pandemic, struggling with high inventories and rising competition. And this is another example of what we're seeing, is that a lot of what we call pandemic darlings, companies that blew up because of the pandemic, they're having issues replicating that growth and that profitability over the course of time. And what we're starting to see is that their valuations are starting to get reset. And then we need to find out, is Lululemon and this luxury fitness brand, a luxury athletic brand that they have, is it just a fad? Or are they going to have some legs similar to, a real luxury brand that can stand the test of time? Koenig also said that Lululemon's acquisition of Mira, which provides an LCD screen for home gyms, online fitness classes, is also a drag on earnings, which means that people are not buying it, which is interesting. But it was about diversification of the product offering, and hoping that, well, if people have the money to buy this higher tier product, they can also buy this LCD screen. Right? So on Monday, Lululemon raised revenue expectations, but also says it expects a drop in profit margin. So what they're forecasting is that we're going to be able to sell the inventory, but because we're going to have to discount it, the margins are going to be a lot lower. And therefore, if we're in this deal because we're looking for margin expansion, we're looking for profit margin expansion and growth, we may not see that even though the revenues may be there. So it anticipate earnings for the final quarter between 4.22 and 4.27, and that was compared with the previous guidance of 4.20 and 4.30. They're not that much lower, but what are we not seeing? We're not seeing a lot of growth there, right? And that's what we want to look at Lululemon. And anytime you're dealing with a company to where it's attractive because it's in a growth stage, Once the fundamental story changes, the stock price normally is going to change. Okay? And that's what I want people to really understand. A lot of the hype around the pandemic companies that blew up because of the pandemic, they did big numbers because of the environment. They're finding now as we get farther and farther out of the pandemic, they're having trouble maintaining that momentum. And what we're seeing is that the market is resetting their valuation, and then we're starting from there. Let's look at a chart of Lululemon. And what we're seeing is that at one time, they were selling at almost $475. And then we sold off very aggressively because of, the whole market selling off. And that was in around November of 2021. We came back up to around 400 and we sold all the way down to 260. We got back close to that 400 again. And now we're currently experiencing more of a sell-off. And what we're seeing is that the market is constantly resetting the value of this company, because what we're trying to figure out as the market is that, do they really have such a enthusiastic audience around their products and their offering and really their value proposition, where regardless of what's going on in the economy, they're going to keep driving sales? And that's what we're looking at. Is this company really going to be inflation resistant? Is this company going to be recession resistant? If they're not, then we have to reset their value, because of they have more inventory, which means they're going to have to discount it. Even if we drive the revenue, the margin of profit's not going to be there, right? And without that margin of profit, they can't spend more money on marketing. They can't spend more money improving the business. And they also can't give money back to their shareholder if they decide to do that. Therefore, they can have the revenues, but lower margin. So this is why I'm a fan of fundamental analysis, because it tells a story of what's really going on in the company. Then that determines what you're seeing on the chart. But the chart doesn't tell me what's going on in the internals of the company. Hope you got some value from it. David W. Williams, also known as Diamond Dave. I'll talk to you later.